Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let us get started. Wall Street indices extended losses for the fifth week in a row as more evidence of turmoil, or rather tariff turmoil, and government cuts emerged. Nike and Accenture joined a long list of other companies last week and warned of sharp slowdown this year. Tariff uncertainties are forcing businesses to pause additional investment, and consumers are faced with higher bills because of ever-growing list of items facing import taxes. The slide on the screen highlights key points impacting leading markets around the world this week. Let us review monetary policy decisions from 6 major central banks around the world this week. The U.S. Federal Reserve held Fed funds rate range unrevised, and Fed Chair Jerome Powell said that the impact of the tariff is likely to be transitory. Powell had labeled the surge in inflation at the onset of COVID-19 transitory too, only to lift sharply higher interest rates after inflation soared to as high as 9% and raged for 2 years. The Bank of England held its policy rate unchanged, and policymakers cited global trade uncertainties and high inflation. The Monetary Policy Committee, in an 8-1 vote, decided to leave the bank rate at 4.5% as members decided to wait for additional data on inflation. Consumer price inflation rose to 3% in January, and retail inflation is expected to accelerate to as high as 3.75% by the third quarter of 2025 in the UK. The committee also noted elevated geopolitical uncertainties and a brewing global trade war, adding another layer of volatility to stock market. Sweden's Riksbank held steady its interest rate and added that the labor market recovery may lag expectations. The executive board decided to hold policy rate at 2.25% and signaled that rates are likely to stay at this level going forward. The Swedish economy is recovering at a moderate pace, and the estimate of annual growth in 2025 was revised higher to 1.9% from the previous estimate of 1.8%. The jobless rate is likely to hover near 8.7% compared to 8.4%, and retail inflation is at 1% from the previous estimate of 0.6%, released in December respectively. The Swiss National Bank lowered its benchmark rate by 25 basis points to 0.25% effective March 21st, citing weakening inflation. The accompanying statement noted retail inflation eased to 0.3% in February from 0.7% in November, and the policy committee reiterated its inflation outlook for 2025. Retail inflation is estimated to hover at 0.4% in 2025, 0.8% in 2026, and the same rate in 2027. The Bank of Japan held its short-term interest rate around 0.5% as widely anticipated, and the central bank halted its rate hikes after lifting rates in 3 previous meetings. The Monetary Policy Committee took a cautious view of Japan's export-driven economy amid rising trade tensions with the U.S. and slowing economic growth in China. The Bank of Russia held its key lending rate steady at a record high of 21% and signaled that additional tightening may not be needed in this disinflation process. Despite the easing of pro-inflationary risks, the central bank confirmed that inflation remains high as demand outstrips the domestic capacity. Investor sentiment was also bolstered after existing home sales in the U.S. in February rose by 4.2% from the previous month to an annual pace of 4.25 million rate, rebounding from the downwardly revised drop of 4.7% in the previous month. Existing home sales, however, declined 1.2% from a year ago amid elevated prices, and median home prices rose 3.8% or nearly 4% to $398,400, and inventory of unsold homes declined 5.1% from the previous month to 1.24 million, equivalent to 3.5 months of supply at the current sale price. Consumer price inflation in February eased to 3.7% from a 2-year high of 4% in the previous month, the Ministry of Internal Affairs and Communications in Japan reported Friday. The pace of inflation slowed after the government resumed subsidies for the electric utility prices. Consumer price inflation, excluding fresh food, slowed to 3% from a 19-month high of 3.2% in January. Despite the slight decline in inflation, prices rose faster than the Bank of Japan's target rate of 2% for the 35th month in a row. Moreover, the core rate of inflation, which excludes food and energy prices, rose 2.6%, the highest rate in a year. In other economic news from around the world, the People's Bank of China held its reference rate steady, dashing hopes of additional stimulus for consumers and property market. China's retail sales and fixed asset investment rose more than anticipated in a 2-month period to February, which covers the New Year holiday period. Eurozone wage growth eased in the fourth quarter, and wages over a 3-month period to January rose nearly 6% in the UK, significantly higher than the inflation. Japan's international trade balance swung to a surplus after exports soared 11% and imports advanced less than 1% in February. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury rebounded to 4.3% after the Federal Reserve reiterated its estimate of 2 additional rate cuts in 2025. Texas crude oil prices rebounded 2% to $68 a barrel after the U.S. slapped sanctions on Iran and the OPEC Plus planned output cuts fueled supply concerns. Natural gas prices in Europe advanced 9% to 44 euros per megawatt hour as ongoing attacks on energy infrastructure in Russia and Ukraine further reduced the chance of resuming Russian gas flow in the near future. The euro hovered near $1.08 as investors welcomed political agreement in Germany to overall debt and ramp up arms production and infrastructure that could be as large as 11% of GDP. ECB President Lagarde highlighted weaker economic growth but downplayed the risk of inflation driven by the EU's tariff retaliations to the U.S. tariffs. The yen hovered at 149 against the U.S. dollar after the Bank of Japan held its short-term rate steady and inflation slowed in February. Let us shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq Composite extended losses for the 5th consecutive week amid growing anxieties about Trump's tariff turmoil, adding to business and economic uncertainties that end the decelerating U.S. economic growth. European market struggles to advance ahead of the U.S. tariff that could spark another wave of global retaliation. The Nikkei's 225 stock average rose for the 2nd consecutive week as investors searched for bargains in defense and semiconductor stocks. Hong Kong and China indices delivered losses after the AI-fueled rally waned, and mixed earnings record reports kept investor enthusiasm in check. Indian market indices rebounded after domestic institutional investors continued to pump new capital into stocks. Let us shift our attention to merger deals, market movers, and earnings update from leading companies last week. General Mills said net sales fell 5% in the fiscal third quarter of 2025, and food provider and parent company of Cheerios estimated macroeconomic uncertainty would continue to impact consumers in the fiscal fourth quarter. Signet Jeweler, the diamond jewelry retailer, reported lower sales in the fourth quarter of 2024 and signaled shifting more stores away from expensive mall locations. Williams-Sonoma, the specialty retailer of products for homes, reported a comparable brand revenue increase of 3.1% in the fourth quarter, and the company raised its dividend by 16%. Dollar General warned that its core consumers are strapped for cash. Amid high inflation, and the discount store operator reported higher sales in the latest quarter. Ulta Beauty posted increased comparable sales in the fourth quarter, and the cosmetic store retailer opened 66 new stores in 2024. Prudential plc, the UK-based insurance company, announced a health insurance joint venture with India-based HCL Group to hold a 70% stake in the merged business. Swatch Group reported lower earnings in 2024, and the retailer of luxury watches and jewelry said demand in China would continue to be restrained. Fraport Group, the parent company of Frankfurt Airport, reported a slight increase in passenger traffic and net revenue per passenger, but traffic was 96% of the pre-pandemic year 2019. Tencent Holdings reported a strong revenue increase in its gaming division as the advertising revenue also jumped, and the Chinese company more than doubled its share repurchase program. Ping An Group Company of China reported a sharp rise in net profit driven by growth in the company's life and health insurance business, and the group's number of new customers rose almost 10% from a year ago. In the week ahead in the U.S., investors are looking forward to the release of the PCE price index and the final revision of the economic growth in the fourth quarter. In addition, durable goods orders and international trade data are also on schedule this week. On the earnings fronts, investors are looking ahead to financial results from KB Home, Intuitive Machines, Lucid Diagnostics, Oklo, Warnings, Walgreens Boots Alliance, and Dollar Tree. In Europe, investors are awaiting the release of the Business Activity Service for Germany, France, and the euro area. In Spain and France, investors are awaiting the consumer confidence data, and France, the UK, and Spain will report preliminary inflation rate, and Germany's unemployment rate is also expected to remain flat at 6.2%. The euro area expects the release of consumer confidence, inflation, and industrial sentiment data. On the earnings front, investors are looking ahead to the financial results from Kingfisher plc, Smiths Group plc, Bellway, Deutsche Wohnen, Metallzug, Exor, and Next plc. In Asia, Japan and India will release manufacturing and services, and Japan is expected to release the leading economic index results as well as foreign bond investment, stock investment by foreigners, Tokyo CPI, and housing starts and construction orders. India will release the bank loan growth, deposit growth, and foreign exchange reserves. On the earnings front, investors are awaiting the financial results from BYD Electronics, China Taiping Insurance Holdings, China Telecom, Hunan Waneng Power International, Sanuk, and PetroChina Company. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Rudera.com, keep up with financial and industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you